Presentation of the 2018 Comprehensive Annual Financial Report, CAFR, from Auditors Whitley Penn, presented by Lupe Garcia.
Well, good evening, Mayor and Council. My name is Lupe Garcia. I was your engagement partner on the city's fiscal year 2018 financial statement audit. I've prepared a brief presentation to take you through the results of that audit and take you through some financial statement highlights and required communications. In addition to myself, other members of the engagement team included Tom Peterson as the concurring partner. Dan Hernandez was the senior manager, and he's here in the audience today. Other members of the engagement team included Cynthia Trejo as the in-charge, and Corbett and Kevin were the audit staff. The audit process takes several months to complete. During interim field work, we focus on risk assessment and test of internal controls. Once the fiscal year is closed, we return and we perform substantive procedures, analytic procedures. We confirm information with third parties, corroborate information with supporting documentation, all to obtain enough audit evidence in order to issue an opinion on the financial statements. There's three different types of audit opinions we can issue on a set of financial statements. An unmodified opinion is the highest level of assurance we can give on a set of financial statements, and that's what we've issued for the city of Friendswood, is an unmodified opinion, otherwise known as a clean opinion on the financial statements. The financial statements are the responsibility of management to prepare. Our sole responsibility in this process was to perform an audit based on audit procedures we deemed were necessary in order to obtain enough evidence to issue our opinion. We did review the city's accounting policies. They are in line with industry standards. During fiscal year 2018, the city did have to implement a new standard related to GASB statement number 75. GASB is the body that sets the financial reporting and accounting rules that the city has to follow, and GASB statement number 75 is related to other post-employment benefits other than pensions, and we'll talk about how that implementation impacted the city's financial statements later in the presentation. The financial statements do include estimates, so there isn't an invoice or a statement that has the amounts that management needs in the general ledger. Some of the more significant accounting estimates include your allowance for doubtful accounts, depreciation expense based on estimated useful lives of the city's capital assets. The fourth and fifth bullet points on pension and OPEB liabilities, those are based on reports from actuaries. The city receives these reports every year. Those are two very large estimates in the financial statements, so it's just important for you to know that. So we did review the city's basis for these estimates, and they are in line with GAAP, and they're reported appropriately. I'm happy to report we didn't have any difficulties in performing and completing our audit. Anyone that we asked to meet with was made available. Any piece of information we asked to review was provided in a timely manner. So I do thank management and staff for their assistance and support and cooperation throughout the audit. There weren't any misstatements that we identified that we brought to management's attention to correct in order to present the financial statements in accordance with GAAP, and there were no disagreements in regarding any estimates or accounting principles or anything along those lines. We do request from management a letter of representations. It's a last piece of audit evidence we obtain. It reads like a checklist just to make sure there isn't anything significant or material that's happened since we left the field that would impact the financial statements that we would need to know about. As far as we know, the city's not consulting with any other accountants or auditors on any matter, and we may provide information to the city from time to time, guidance, answer a question, but no time do we feel we have to answer a certain way or take a certain position on any matter in order to be the city's external auditors. On page 1 of the comprehensive annual financial report, that's where you'll find our letter that includes our unmodified opinion on the financial statements. So users of the financial statements will look there to find our opinion, which is unmodified, the clean opinion. We also included a paragraph to emphasize the fact that GASB statement number 75 was implemented in fiscal year 2018. So this is the impact GASB statement number 75 had on the financial statements. It did require the city to restate beginning that position by $582,000. The total OPEB liability is $1.6 million. That's the balance on September 30th, 2017. These are liabilities related to retirees' ability to participate in the city's health care plan. And then there's also a term life benefit through TMRS that's considered another post-employment benefit. So these are the amounts that come from actuaries based on the city's employee population and various factors. So it's going to change every year. This is a financial reporting standard implementation only. This doesn't change the way the city budgets or funds benefits right now. This is just baseline year one of this amount. So after 3 years, 5 years, 10 years, then you'll have trend data to make decisions on policies regarding these benefits. The statement of net position is the city's balance sheet. This reports all of the city's assets, including its capital assets. Total assets were $201.8 million. The majority of that balance is $158.9 million. Capital assets, land, building, infrastructure, equipment, vehicles, netted depreciation, current and other assets, that's cash, investments, and receivables. Total liabilities are $83.1 million. The majority of that balance is going to be your long-term debt, your general obligation, and your revenue bonds. That also includes the pension and OPEB liability. The net position, that's the net worth of the city. That's $119.9 million. So that's merely the difference between your assets and deferred outflows and your liabilities and deferred inflows. Looking at the long-term liabilities, you can see the majority of that balance is your general obligation bonds and revenue bonds. The net OPEB obligation, it was zero because that was recorded under the previous standard that applied to OPEB. This year was replaced with GASB statement number 75, so you can see that's where the $1.8 million in the OPEB liability came from. The net pension liability, you can see decreased from the prior year. So for the year that this liability is reported under, it had a good year in the market. The investment rate of return was high, so that offset the liability. So that's why you see the $12 million decrease down to 7.9. This time next year, it could be very different because 2018 was not as a great year as 2017, so that liability could very much go up. So that's the nature of these liabilities, OPEB and pension. They're going to fluctuate up and down. Total long-term liabilities were $80 million. The general fund, which is the city's main operating account, total revenues were $29.6 million. Total expenditures were $31.4. Other financing sources, $2.6. So fund balance in the general fund did increase by $742,000 for an ending fund balance of $14.3 million. Fund balance does get a lot of attention, especially unassigned fund balance, because that's the portion of fund balance that represents what's available to spend. $9 million was the unassigned fund balance as of September 30th, 2018. That does include the city's 90-day reserve requirement, and you can see here on this slide what unassigned fund balance looked over the last 5 years. If we translate that into operating expenditures, that translates into 105 days of operating expenditures. That's over 3 months of operating. GFOA recommends 2 to 3 months. You all are well within that range of a healthy fund balance. This is not a savings account. This is the city's working capital. This is how the city operates and makes payroll and pays vendors for supplies and services provided. The water and sewer fund is the city's enterprise fund. Revenues exceeded expenses. The change in net position was positive in this fund as well. So ending net position was $41.3 million. If we look at unrestricted net position in this fund, that represents 690 days of operating expenses, excluding depreciation, because that's a non-cash expense. $13.6 million in unrestricted net position it also includes and is well above the city's 90-day reserve requirement. Our report on internal controls did not identify any material weaknesses or significant deficiencies, so a clean report here as well, as no non-compliance material to the financial statements. And because the city did receive and expend more than $750,000 in federal awards, we did have to audit this as a major program. The disaster grant public assistance related to Hurricane Harvey. Again, this was also a clean report, no question costs, no non-compliance, no material weaknesses or significant deficiencies. So the results of that audit get reported to the Federal Audit Clearinghouse, and that's how the federal agency will know what the results of the city's financial statement and single audit were. So that concludes my presentation. If there's any questions, I'll be happy to take those questions.
No questions. Thanks, Lupe.
Thank you.
Thanks to Katina and Rhonda for doing such a great job with our financial business. Appreciate you. What is this, like the 17th year in a row. I don't know. I'm making up a number now, but 32. 32 years in a row? Wow. Good job. You've been here the whole time? Or? Not quite.
She started when she was 12.
Yeah, exactly. All right. Well, thank you very much. Great job.
Thank you.
We're proud of the fact that we have such a good financial system being run here.